What's going on, guys? In this video, we're going to talk about a profitable scalping strategy. So again, this term kind of gets thrown around, right? Especially if you're a new trader. You're looking for a strategy that's profitable. You're looking for a strategy that obviously makes more money than it loses, right? Regardless if the strategy hits at 80% of a win rate or a 20% of a win rate, right? We need it to be profitable. But the thing that I really want you guys to take away from this video and actually focus on when you're looking for a profitable scalping strategy is what works for you, okay? Is that trading the NASDAQ or is that trading the S&P 500? Some people can't handle the volatility in the fast moves of the wild, wild west of the NASDAQ 100. Maybe something a little bit slower like the S&P 500 or maybe the RTY or maybe the YM, which is Dow, might be a little bit more suitable for you. The next thing that you really need to understand is how much size are you comfortable playing? Meaning, if you're going to lose a trade and in your kind of outline, in your trade plan, if you want to lose no more than, let's say, $300-$400 a day, what size do you need to trade that you're going to be able to take scalps that are going to allow you to not really blow through that number, right? So a lot of times people see everyone trading the NASDAQ 100 because of how fast it moves, because of how big the ranges are. And then once you actually start to trade it, you go ahead and you put on 1, 2, 3 mini contracts, trade goes against you, you're down $1,000 and now you're panicked, right? So how much size can you actually play? Is it one mini? Maybe you can trade one mini trading the RTY or the S&P 500, but you can't do it trading the NASDAQ. Maybe you want to trade the NASDAQ, but you're not comfortable with the risk. So maybe you want to trade 3, 4, 5 micro contracts, okay? The next thing that you really need to focus on when you're looking for that profitable scalping strategy is something that is very, very simple, okay? So it doesn't have to be, looking at order flow and looking at a million different indicators and learning supply and demand and then learning, book map and all this stuff, right? Find something through back testing that works and then start implementing that in the live markets. Now, I'm never one to say go out and do paper trading, go out and sim trade, because there's no emotions there, okay? I only believe in sim trading or paper trading if you're trying out a new platform where you're looking at the charting tools, you're looking at the drawing tools, you're looking at how to, set up ATM strategies, market orders, how to navigate the actual platform, okay? I would recommend going out, spending a little bit of money, because again, remember, this is a business and you need to invest in your business. So I would go out and buy 2 or 3 evaluation accounts through prop firms, Top Step, Apex. Those are firms that I work with. Those are firms that I'm funded with. Those are firms that I've taken payouts with, so I can recommend those 2 firms. The other ones, there's some great ones out there. Earn to Trade, Take Profit Trader. Those ones are also very good. There's some new ones that are coming up. Again, which firm is better than the next is not really a topic of discussion. If we're really worried about this firm is better than this one, we're spending our time and energy in all of the wrong places. Where we need to spend our time and energy is actually taking trades and then understanding what we're doing right, what we're doing wrong, and where can we make some adjustments, because this business is all about making adjustments in real time. Okay, real adjustments with our stop loss, real adjustments with our take profit, depending on the day's range, real adjustments, whether that means, sizing down, sizing up, when to scale, right? Those are things that go into a profitable trading system. I would always recommend something very, very simple and one entry model. So just looking for that one thing to happen that's going to trigger and result you taking a trade, okay? From there, what I would then work on is doing that same thing in replicating that process for at least 20 trades. And whether those 20 trades come in 1 week, whether they come in 2 weeks, whether they come in 3 weeks, depending on your strategy and how often it's appearing, then and only then I would make adjustments. I wouldn't take a setup, let's say for example, lose on the first trade and then start to make adjustments. We don't have enough data. There's not enough information there. There's not enough price action that has printed for us to see, is it truly the strategy that needs some adjusting, or was it just, a bad market condition day? Right? Some days are trending, some days are more choppy, some days there's big reversals, right? And again, not every day is going to be the same, but we're going to start to notice similar patterns in those kind of 3 different days. So you have your hard trending days where you don't really get any pullback or any bounce depending on the direction. You get some days where you get an initial reaction early in the morning, let's say the first hour of the market, we really scream to the upside, and then it completely reverses and it never takes out those highs. And then you have days where it kind of starts off very, very choppy, and then after lunchtime, you get that breakout in either side of that opening range. There's only 3 things that are really going to happen. Now, when those 3 things happen, that is when and only when we can take our trades based on our setup that we're looking at. And if we keep our setup very simple, we're going to start to recognize what type of day it is, right? So again, let's think about this. I'm a big sports fan, right? So I like football, and I like to think about things like this. When the offense comes to the line of scrimmage, right? For all of you guys who don't understand football, I'm sorry. But when the offense comes to the line of scrimmage and the quarterback is looking at the defense, there's a shell that's being put up there. Now, again, the shell of a defense is not necessarily what can happen, right? And I'm going to show you this I'm going to explain to this how this is going to work when it comes to trading. Let's say, for example, we're in a cover 2 where we have 2 high safeties. Again, if you don't understand sports, you don't understand football, just try to stick with me. But if I see 2 safeties high, I know that XYZ can happen based on what the defense is giving me. Now, when we talk about stocks and we talk about the market can either shoot out of the gate off the open, and that's my shell, and it can do one of 2 things. It can confirm that after the 30-minute opening range, which is a trade for a continuation to continue with that trend, and it can break out of the initial balance, which is the first hour of trade range, and that would also be a continuation. Or it can be a false look, right? And that false look would mean that it breaks out, let's say to the upside, and then after the first 30 minutes, after the first 1 hour of a trade, it fails to go in the same direction it was off the open. That would be a failed look, right? So we're going to start to see those patterns on a day in and day out basis. So we kind of know when we get the confirmation, more times than not, we're going to make money to the upside, and we're looking to buy the dips after that, right? If it fails to take out that initial move, then it was just like a mirage front, right? It was just a fake out. It was just a trap. We need to be looking in the opposite direction, short in this example, until the market and price action has proven to us that it can take out that initial high. Okay, and that's going to kind of keep you on the right side of the trade more times than not. So I hope you kind of understood that analogy just a little bit, but you got to get really good at navigating what's out there, looking and identifying the defense, I guess I could say, right? If we go back to the sports analogy, identify what the defense is being provided by the market, and then you're going to have better offense, meaning where you're going to place your trades, whether that's going to be continuation trades to the long side or looking for those reversals back down to the downside. That's stuff that goes into a profitable trading strategy. Okay, so never mind supply and demand, never mind reading the tape. These things are all great. You're going to need to know how to do those things, obviously, but it's not necessarily going to be fixated on one particular indicator or strategy or supply and demand or moving average or this, that, and the other if you can't identify what's going on in the markets prior to that. Okay, so a very simple strategy that I like to use is just a 20 SMA, and I like to look for these short-term, small time frames change in trends. Now, these change in intraday trends doesn't mean that it's the trend of the overall market, right? Market can be going up, but it can be trending on an intraday time frame, on an intraday level, to the downside, right? So we can still get in and play to the downside, even though the overall stock market's been going up for 6 months. Okay, so we got to be good at really identifying those short-term change in trends. I like to use a 20 SMA. Let's give you guys an example here. Notice on my chart, let me kind of adjust this chart a little bit so I can see my screen just a little bit. So at 6:50 in the morning Pacific Standard Time, I'm located in California, so the market for me is going to open at 6:30 in the morning. Okay, so at 6:50 in the morning, we get a short-term change in trend. Now, does this mean that this market is going to trend to the upside for the next 2 or 3 or 4 or 5 weeks? No, this is a 5-minute time frame. Now, if this was a weekly time frame, a daily time frame, a 4-hour time frame, maybe we can have a little bit more confidence to say that there's a short-term change in trend for the next week to month to quarter, right? But since we're looking at a small time frame, this change in trend is just for the time being, and that trend can last 10 minutes, that trend can last 3 hours, that trend can last all of 5 minutes, right? It's just a short-term change in trend. The longer that it holds that change in trend, the bigger the trend and the more strong it is in the day, and that's when you need to be buying the dips. When you get a failed change in trend, like sometimes it'll close over the 20 SMA, confirm, go up a little bit, and then completely reject, that's a failed move that you need to be looking back towards to the downside. So notice at 6:50 in the morning, we get a close over the change in trend, which is in my particular example going to be the 20 SMA, which is the purple line that you see on my screen. It's right here, right? What you're looking for is a confirmation. So the confirmation is going to be the following candle that takes out the reason why, which is a candle that closes over the 20 SMA. As soon as price action takes out the high, that's when you're going to enter. You're not going to wait for the following candle to close. You're not going to wait for another candle after that. It's just let one candle close over the 20 SMA. Look for a following candle to confirm the high. As soon as it does that, get in. Now, from there, since we're scalping, what does a scalp typically mean? That we're looking to just scrape off a little bit of whatever move is happening. So a lot of scalpers, take 3 points, take 5 points, 10 points, 15 points. These are all very logical and realistic on the NASDAQ 100. Now, if we're talking about the ES, maybe we're talking about a 2-point scalp, a 1-point scalp, a 3-point scalp. But typically for me, okay, and again, everyone's different, but for me, I'm looking for around a 5-point scalp. So if I can identify a pattern or a setup or entry model, terminology is the same for all three. When I can identify something in the market that I've seen over and over again through back testing, I'm comfortable and confident taking that setup when I see it. Now, as far as a stop loss, there's one of 2 ways you can do it. You can give yourself a technical stop loss, which I agree with a little bit more, which would be, hey, if this confirms, but then we lose, let's say a 5 or 10 day moving average, I've got to get out of the trade. Okay. Hey, when we confirm, I'm going to go long and I can use a previous 5-minute candle as a stop, right? Or you can use a hard dollar amount. So for example, let's say someone wants to lose no more than $150 on this trade. You can set a stop for $150, right? Or $100 or $200, whatever that number may be. And that's a hard stop. Now, sometimes with those hard dollar amount stops, you might get wicked out. It stops because it didn't hit, remember, the other way, a technical level, and then it still continues to go in your favor, and then you lost money when you realistically could have made money. Again, if that happens to you, it's not like you need to be asking the question, well, what can I do differently? That's your rule. That's the risk you are comfortable with. So you live and die by that rule and risk that you're comfortable with. There's going to be other opportunities that are not going to stop you out, which you should make money on. So again, there's a little bit of a yin and yang, and there's no real right or wrong way to do it. In order to set up a profitable scalping strategy, you need to be consistent across the board. So position sizing, number of contracts needs to be consistent. The stop loss needs to be consistent, whether it's a technical reason or whether it's a hard dollar amount stop. Your take profit needs to be consistent. All of these things need to be consistent. In order to do that and be consistent, you got to be very, very disciplined. And this is why it takes traders sometimes 1, 2, 3, 4, 5 years before they actually pick it up and they feel comfortable being consistent, because it takes a long time to learn these skill sets, right? We keep running our heads against the wall, running our heads against the wall, running our heads against the wall without seeing any much success, until finally you just get very, very fed up and tired with it, where you say, okay, that's it. I'm going to do everything that I wasn't doing. I'm going to start doing now, because I'm tired of doing what I want to do and it not working. So again, when you're setting up a profitable trading scalping system setup, strategy, these are some of the first questions that you need to ask. It's not necessarily what indicator it is that's going to give you the actual strategy. It's aligning the whole foundation that's going to allow you to operate the system in a manner where you can do this day in and day out. I hope this video helps you guys. If it did, make sure to like, comment, and subscribe. Hit the bell notification so when I do drop a new video, you guys can be alerted first. Also, if you guys want to trade with me, that link is down in the description. And again, got to do some housekeeping here. If you guys are interested in obtaining more valuations or signing up for prop firms, or you're looking to add more accounts, Apex for scalpers, I would recommend a little bit more, just because you can have more number of accounts with Apex. You can have up to 20. So imagine if you, let's say, had 20 evaluation accounts, $50,000 accounts. The minimum payment threshold is $2,600. As soon as you make $2,600, you can withdraw 2,000 of that. If you had 20 accounts, you could be talking or even 10 accounts, you could be talking about withdrawing 10,000, 20,000, a month. Is very, very good money. You can copy trade these accounts. So meaning you don't have to take individual trades on all of the accounts, but you can kind of just take one trade, make $150 times 20 accounts, and that's a $2,000 day, right? So again, these things are very, very good. Apex is very good with that. If you are a scalper, and meaning that, you guys clicked on this video for scalping, I would definitely recommend Apex for that sole purpose alone. But again, I'll see all of you guys on the next video. Make sure to like, comment, subscribe.